Hey, happy Sunday, everyone. Welcome back to Verified Gains. I want to make this video very quickly. Actually, today, might be a longer video 'cause I want to cover some major topics ahead of the week. As you guys already know, we had talked about the Liberation Day and the tariff war last week, and we saw a lot of fear in the markets, a lot of sell-off, and we're expected to get a lot of news, this coming week, starting tomorrow, when the markets open back up for the traditional equities market. So I want to make this very important video for educational purposes, of course, not financial advice, in regards to what we could potentially expect in terms of price action. And, some of you might be saying, hey, I thought macro and news weren't important in terms of, perhaps technical analysis. Well, today we're going to be doing a little bit of prediction. So to make an informed decision, I will go out of my way and talk about macro a little bit. So let's dive right into the charts, starting with Bitcoin. We saw that, it was largely consolidating at this $82,000 to $83,000 mark. We have yet to retest this horizontal resistance line at $78,000. Now, the key point is this. By the way, I'm going to get rid of this yellow trend line because it really hasn't been relevant, for the past 2-3 months. So I think we can forget about that for now. And really, here's an important point. So, look at how really we've been bouncing, up and down, but largely we've been stable. And that is very different from our past experiences when comparing this to the traditional equities market. And this is a concept I've talked about time and time again in the past. Really, a strong bull signal is going to be when Bitcoin and the traditional equities market start to exhibit some discordance, meaning, and discordance could be a true discordance, meaning, Bitcoin is actually going up while, the S&P 500 or NASDAQ is going down. Or it could also be the case where the magnitude of, price variation differs. And this is very interesting because traditionally cryptocurrency is way more volatile. So if the markets are going down, then traditionally cryptocurrency goes down or goes up at a higher magnitude. But if you look at it over here, when comparing this to, let's say, the NASDAQ 100 mini futures, look at the difference over here. I mean, Bitcoin was largely, moving sideways, whereas we saw a huge drawdown for NASDAQ. And, and this is very significant because now this tells us, wait a second, is Bitcoin, apart from being a quote unquote hedge against inflation, is it possible that we might be getting a bull signal here? That said, and remember what I said before, it's very important to keep track of this parallel channel. And for NASDAQ, we're actually retesting the bottom. And once we retest the bottom, it would be a great time to dollar cost average. And honestly, I've been dollar cost averaging nonstop since Liberation Day. Probably the best buying opportunity. So, you really have to look at the markets and dollar cost average when the opportunity is there. You can't be one of those people that say, okay, well, the stock markets are crashing. I'm just going to put my computer away, not look at the charts, and pray and hope that the markets bounce back up. No, you have to be very proactive. You have to be diligent. And that's how people profit off markets. You can't be fearful. You have to be logical. You have to be objective. Yeah, you can't be emotional over money. And you have to strike when the opportunity arises. So look at it over here. Back in March of 2020, we saw a huge drawdown. Guess what? A lot of people bought here at the bottom. Right now in 2025, I don't know if this is the bottom, but there's a high likelihood that we are approaching the bottom given this parallel channel. Do you see what I'm saying? So here we broke down below, tried to bounce back up, rejected, and now we're drawing down. And once we consolidate over here and we don't drop down further, then there's a very high likelihood that we will bounce back up. Now, I don't know the time frame. It's possible that the consolidation lasts through the entire Q2. I hope not, but we'll see. And that actually brings to my next point, which is how do we know, or what is going to be the macro news that signals a bounce back up? And it actually has a lot to do with the tariffs news. So, by the way, tariff is a very complex topic. So, I'd say 99% of people who talk about it on the internet actually have no idea what they're talking about. Okay, it's likely some form of regurgitation presented by the mainstream media. It doesn't matter which side of the the politics spectrum you are on. Okay, unless you are a tariff expert, an economics academic, trust me, you have no idea what you're talking about. Okay, and I'm quite ignorant on the topic of tariff also. But here's my little 2 cents. The tariff, okay, is a tool for political power move, but apart from that, it is also a tool to bring down the stock prices so that people can buy in at a better price. Now, this is very unfortunate if you're planning for retirement this year and you're trying to, you know, exit, take some money out of your retirement fund, right? So it's not ideal. But for those who are actively investing, a tariff is a tool to, I don't want to say bring down the stock prices to fair price, but basically, a tool for inciting correction. Okay. So then, how do we bounce back from here? Because we can think of tariff as sort of like a market making tool. Okay. And the key point is going to be what the Fed chair has to say. Okay, so that's the key point here. Okay, so on April 9th, there's going to be the FOMC minutes. And the next day, we're going to discuss inflation rate. Okay, so we're going to get that year over year inflation rate data coming out. And look at the forecast. Okay, so I don't know if I actually trust this data, but it's very possible that inflation, is tame, so to speak. Okay, so the inflation news is not going to be that bad. And if we think that the tariffs are going to slow down the US economy, then it's very, very likely that the Fed chair is actually going to announce decreasing interest rate. Okay, so cutting the interest rate. And I guarantee you, if we start cutting interest rate, then the markets are going to bounce back up right away. Okay, so that is my prediction. My prediction is on the 9th, there's going to be some news on possible interest rate cut depending on the inflation rate. On the 10th, we actually announced that inflation rate, is stable, tame, not too bad, and then the markets bounce back up. Okay. So what is my move? And that is exactly why I've been dollar cost averaging this whole time, because I'm taking on that risk, right? I'm predicting that the market has essentially neared bottom. I'm getting in at the well, not the best price possible, but a relatively good price. And if we bounce back up from here, then really it's just green light all the way. And and that is why I've been dollar cost averaging Solana nonstop, meaning I've been going out of my way, not the usual once every 2 weeks dollar cost average, but actually using a bit of extra money to dollar cost average into Solana. And I posted a video last week, but and PopCat also. Okay, so I get that PopCat is continuing to draw down. Now we're in the 14 cents territory, but I think that's what's going to happen. So today was a little bit of a long video. Let me know if you guys agree or disagree in the comment section below. And but once again, thanks for watching. Thanks for listening in, and I'll see you guys tomorrow, hopefully. All right, I'll see you guys later. Bye bye.